Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, back to the market here. Markets are slightly lower across the board. Extremely light volume from majority of the day. We did have a little bit of pop on volume. If you take a look here at your lower range chart, just over the last hour or so. And again, that coincided with new FOMC policy statements that just hit the market there. And ultimately, the Fed basically just reiterated everything they said. They're going to continue to do stimulus as long as unemployment remains well above 6%. They're looking to continue to watch the economy closely. All that jargon, that nonsense kind of stuff, guys. The market initially just kind of floated lower. We came in, made a new low on the markets there, and now you're seeing us floating back up just a little bit. Only 82 million shares traded here at 3 p.m. Eastern time at this point in time. Other than that, it's been a couple decent trading days out there in terms of day trading. Swing trading continues to be awesome in terms of slowly finding charts that match up to the PPT strategies. And again, the PPT stands for proprietary price, pattern, and time methodology. But basically what we're doing here is just continuing to follow the markets, looking for key moves on stocks. One of the key stocks that I brought to the attention of the market yesterday was Valero here, and Valero continues to kind of hover here. And again, at early morning, it popped up a little bit, reversed. In my opinion, Valero continues to be an overbought stock based on symmetry. And again, if you take this low pivot to this pivot, and then you add that to this, it basically matches right up in this upper range. So we should see Valero actually pull back just a little bit. It's just down a few pennies on the day today. Was down as much as $1 earlier, but we'll continue to follow it. A couple other stocks I'm keeping an eye on. JP Morgan Chase up 14 cents. Not a major move there, but I'm still watching because the 2011 highs and the 2010 highs are coming very, very close to current price. Right around the 48.30-35 level, we're looking at major triple top action. Okay, and I will be watching that very, very closely to see where it all plays out. But right now, again, JP Morgan Chase, a very intriguing towards the resistance points right up there for a small pullback. And again, and when I say small pullback on a swing trade, we're looking for like a $2 pullback, $1.50 pullback. That would be considered a small pullback. And again, when this market does continue to pull back, we're seeing a little bit of downside today. I actually think you'll see a little bit more as the market pulls back over the next couple weeks. But then we actually should head back up. It's just a matter of making money on the downside, then reversing positions, making money on the upside. Okay? So that's what we're seeing there. I'm going to keep on scanning through here. Let me just go to a couple other charts. Amazon, a very interesting chart today, reported earnings yesterday after the bell. The stock initially spiked lower and then just dramatically spiked higher. It opened this morning near the 52-week all-time highs, then just sold straight off. And again, it was so interesting because the earnings actually came out missing analyst estimates on the top and bottom line. Revenue missed, earnings per share missed. The stock still squeezed higher after hours into this morning. Again, anyone who was thinking about buying it up here this morning, let's just hope they didn't do it. And again, this is just one of the main reasons why you always refer to the charts. If you look at the chart, guys, I mean, this is the long-term chart from 2010. Look at how high this chart is in the short term. I mean, even going just to where it was a few months ago in November, look at where it was. And really a wacky chart out there. But the stock continues to have a PE in the 200 range, a little on the ridiculous side. Granted, they grew earnings at, I should say they grew revenue at 22%, but it still didn't even meet expectations. So to see this thing where it was trading this morning, it actually hit 290 after hours yesterday. A little ridiculous. Now it's much more in line. Still up on the day, but it's come in about $20, or I should say about 10 from where it was trading this morning and 20 from after hours yesterday. All right, Goldman Sachs remains slightly higher. Chevron, beautiful pullback. I gave you guys this trade in this video. Again, these videos actually have some beautiful hidden plays. I just basically give them out openly, but you have to actually watch and pay attention. But one of the levels I gave on Chevron here, I gave this level 2 weeks ago even, every day since, if you look at the past videos. Gap fill on Chevron right here was at 117.35. Yesterday, you tagged it. Look at the reversal today. Down 82 cents from that level. So basically down $1 from that level, and again today down 82 cents intraday. That's a great level. If you recognize gap fills, look at the extension move on the chart straight up. That was going to be resistance. Really a no-brainer for at least a one-day. I wouldn't hold it into Friday because of earnings, but in terms of a one-day pullback, you had to figure that you'd get some sort of pullback off of gap fill. So very nice there. What else do we have out there? Exxon Mobil getting hammered today, actually down about $1.22. So beautiful little fall on Exxon Mobil today. If we go to the intraday chart, we can see exactly it's trading right around the lows of the day. That's also dragging charts down just a little bit. That's why the SPY is under a little bit of pressure. Looking at the SPY intraday, again, you're still kind of hovering on this blue trend line. This blue trend line is a great level because it notes basically this pivot high. See this high? So the high from, I guess that was on Monday, became a low consolidation pivot on Tuesday. And then when we hit it this morning on Wednesday, we got the bounce, pulled back, kissed it again, bounced up, and then again just continued to kind of chop around here. So again, just looking at the Exxon, I should say the Spiders chart here, you're just continuing to kind of hammer on this area. If this area breaks, the next stop is not that much further lower. You're looking at the 200 MA. With the light volume, it's just very, very tricky for this market to sell off in this kind of atmosphere. All right. Let me just see on the daily chart. The daily chart, again, was into key resistance yesterday. I talked about this in my technical analysis video to members. Take that pivot high from 2011, connected to the pivot high 2012. We're right into that level. That's a huge area of resistance on the SPY, which is the S&P 500, essentially. So, again, continue to watch for resistance there. We are pulling off it. I do expect continued movement to the downside or the pullback station based off of that level. And again, I'm positioning myself to make money on that. I have a couple longs out there. One of the longs out there is Rosetta Genomics, which is trading up about 22 cents, got as high as $4.95, but I'm in at $4.45 with members. So again, just an awesome little entry there, already in the money, almost 10%. And again, one thing to recognize about the PPT methodology and the strategies, guys, which are proprietary in nature, we're neither bulls nor bears. You know, you don't want to be a perma bull, perma bear. What you want to be is just focusing on any chart and read it appropriately based on the PPT methodology. It'll tell you whether or not to be long or short. Like the Rosetta Genomics, perfect setup on the long side. I'm up 10%. I have shorts out there, shorting continually if the chart shows me, and we're in the money looking for profits on those. So it's just about positioning yourself, but you have to know the methodology. And once you know the methodology, you make trades, and you just profit for life. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Learn the PPT strategies. And again, as I said, profit for life.